Hello traders, hope you're all doing well. Welcome to my video on the Schaff Trend Cycle Indicator. In this video I'm going to show you a simple strategy that you can use to help capture moves such as this one for almost 600 pips. It's a very simple strategy. You can use it on any trading platform, any trading instrument, so Forex, stocks, cryptos, commodities, indices, etc. and any chart time frame. Okay, I have a 1 hour GU, that's a British pound US dollar 1 hour chart here in the MT4 trading platform, MetaTrader 4. I like to trade the 1 hour charts and above as they contain more price data, and therefore I find the signals tend to be more reliable. And that applies not just to the Schaff Trend Cycle Indicator, but technical indicators in general. And for me, my preferred method of trading, which is price action trading. Okay, so just briefly, the Schaff Trend Cycle Indicator can help you identify overbought and oversold market conditions. And then we can use this to time our entries into the trend. This is my interpretation of it and how I would trade it. So the first thing to do is we need to identify a trend. You can, of course, use a simple moving average indicator to do that, or you can just use your eyeballs, look at the chart, support, markets making higher lows. What does that mean? We're in an uptrend. Price is moving away from support, higher lows, uptrend. Simple as that. So once we've established there's an uptrend, a clear and obvious one, we don't want to trade in choppy markets using this strategy. This is a trend trading strategy. Okay, so you're going to look for a clear trend. And once we've established the trend, then we're going to look for the Schaff Trend Cycle Indicator to be overbought or oversold. All right, we're in an uptrend here. So what we're going to do is we're going to look to buy when there's a pullback. Okay, so what we want to do is we want to wait for the trend cycle indicator to be oversold, and that's down here somewhere. Okay, if it's down here, it's oversold. If it's up here, it's overbought. Okay, so we can see it was overbought here after this nice rally upwards. And then as the indicator dropped, so did the price. So what do we do in that instance? Well, as soon as you see this drop down below here, you know there's been a pullback in the trend. And then once we see that, we draw our resistance level, okay? We can also line up our trend line there. There's a nice wedge pattern formation there, clear uptrend. This trend cycle indicator was oversold, so this is when we look to buy. Some traders may buy down here on the pullback, okay, as this level of support is formed there. You can see here, as I said, 1 hour chart, so plenty of price data. So more aggressive traders would have just bought on the pullback. Okay, however, I'm going to wait for a breakout of resistance, which happens here, and then we can enter into this upwards trend on the breakout there. Okay, and if you don't want to take the first breakout, you can always wait for another pullback, which you get there, and then trade the second breakout. In this instance, we wouldn't be using the indicator for guidance there. We can just use the price action trend trading with price action, which is my preferred method of trading, especially on the longer term chart time frames. I don't see why I'd want to pull my hair out trying to scalp a few pips on the 1 minute or 5 minute charts when I can capture big moves like this for hundreds of pips by trading smart, not hard, less time chart watching, which is great. So if we take this breakout trade here, okay, profit potential almost 400 pips on this trade, stop loss just below the recent low, so around 20 pips, which is a relatively tight stop loss for the 1 hour chart time frame. What I wouldn't want to do is, see price jump up here and panic and get excited and exit the trade for 80 pips profit, which, wouldn't be a bad trade at all. However, you're just leaving way too much on the table. Okay, I like to cut losing trades short and then let winning trades run. I wouldn't have a take profit. I would just move stop loss, first of all, to break even. As soon as price shoots up here, lock in the trade at break even. Worst case scenario, if price turns around, we get taken out for break even. Okay, and if price continues in our direction, then we can just move the stop loss below the low, 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 and just trail the price and maximize the move as much as possible. Okay, so if we can capture, 400 pips on the trade, it doesn't matter if we get the initial entry wrong and take a 20 pip stop loss here and there. Even if we took 3 stop losses in a row and we were down 60 pips plus broker fees, we just know that when we eventually capture a big trend like this one, we can make back those pips and then a lot more on top as well. Okay, another advantage of trading the higher term chart timeframes, because you'll find if you're trying to scalp pips on the 5-minute or 1-minute charts, you're going to likely be having a poor risk to reward ratio as well. Like I don't know, a 10 pip stop loss with a 10 pip take profit, you know, it's just can be hard to recover from losses. Okay. If you can close part of the position as well as the trend continues moving up, like close, I don't know, 25% and another 25% and let the rest run. It's just up to you. If you do exit prematurely, you can always enter again. So just wait for the Schaff Trend Cycle Indicator to drop as it does there. That shows you that there's been a pullback, and you can just trade the breakout there, as you can see. Zoom in for you. Breakout there, pullback, breakout. That resistance then comes support. Some traders may wait to see if there's a fake out. Okay, so they may wait for the breakout and then for price to test the resistance to see if it holds up as support, which it does around here, and then they would enter once that's confirmed. So some bullish candlestick patterns there. You've got a bullish hanging man, bullish doji, various signs along with the obvious. The market is making higher lows. Problem with that is there'll be instances where the breakout doesn't actually pull back like this one. You see this breakout happen and price didn't actually come back to test this level, but it still was a good trade nonetheless. Okay. And again, we have a drop down here. So what do we do when we see the drop down? We know there's been a pullback. We can draw our resistance and just trade a breakout of the resistance, come support. And there you go, another possible entry. So Schaff Trend Cycle drops, it's oversold. So we can look to trade a breakout of the resistance in line with the overall trend. Okay. Careful not to buy too high if we zoom out. You know, once you've already seen a move like this happen, you don't want to buy at the high. You want to ideally get in as early as possible. Okay, some more aggressive traders, you may have seen when it dropped down here in this oversold scenario down here, there would have been a nice early entry there. Okay, basically that's quite a strong level of resistance there. Okay, you can see this big breakout candle. The price did actually come back, and as I said, we'll often test the resistance to see if it holds up as support. Just zoom in there. Breakout, big breakout candle, bang on the button there for this resistance. 3 inside up candlestick formation. You know, you could have either traded the breakout, you could have traded the pullback, or you could have traded a breakout off the pullback. I mean, plenty of options there with the Schaff Trend Cycle showing us a good time to start looking for trades. In my opinion, it's not actually necessary to have this indicator, just simply because you can use your eyeballs and see a pullback anyway. It's only just really showing you where there's a dip. But yeah, for the uptrend, as I said, good money management. Okay, so you want a relatively tight stop loss and just try and maximize each move we capture as much as possible, using a break even and trailing stop, closing part of the position if you want. Don't buy too high or sell too low. There's a real simple strategy, can be used on any trading instrument and time frame. That's a long example. If we just do a short example now, so again, you can use, if you like, a moving average to show you which direction the market's you know, heading. The thing is, they can be lagging as well, and what, you know, open to interpretation. Do you use a 200 MA? Do you use a 50? Do you use a 14, 100? You know, it's different, but for me personally, I just like to draw myself. You know, I can clearly see resistance there, lower highs, downtrend. That for me is enough. I may even draw the support, see a breakout of that support line, wedge formation. I know that we're in a downtrend anywhere from around here, and in fact, this is perhaps an aggressive entry after this triple top chart formation. This would have been a good breakout trade there. You can see with that big breakout candle, traders were watching this level, and a lot of traders jumped in. Market making lower highs there, wedge pattern, breakout to the downside, you're in on the new trend there. Okay, ignoring the Schaff Trend Cycle Indicator in this instance. just emphasizing the fact that you don't need technical indicators, which can be lagging in repaint, which means change after the fact. You don't need to rely on them for entries. You can just use common sense as well. However, I understand some of you are probably visual kind of traders. You want it spelled out for you, and you want, clear steps. Well, if that's the case, trend is down. We know that. Wait for the Schaff Trend cycle to be overbought, because when it's overbought, we're going to look to sell into the trend. Then you just draw your support. M chart pattern formation there as well, a big breakout to the downside. No coincidence you have these big breakout candles. Okay, traders are watching these levels, and this would have been a good entry into this downtrend as well. Had you were taking the second one, over 300 and around 350 pips profit potential. The first one perhaps more aggressive, but more potential reward, over 450 pips. Again, I would have used stop loss just above the recent high. So for this trade, stop loss above here around 15 to 20 pips. Then as price dropped, stop loss would be moved to break even, and I just trail the stop loss above the recent highs all the way down just to maximize the move as much as possible. Okay, check out my other videos as well to see the various price action patterns, like the M pattern here. You've got the triple top up here. Okay, you also got candlestick patterns as well, can help you confirm trades. Obviously, this level of resistance, level of support, lower highs, wedge formation, breakout. Pretty straightforward, really, once you know what you're looking for. We don't need to rely on any kind of unicorn magical crystal ball indicators. Just price action trading. Price action is telling us what price is doing at any time, combined with, of course, good money management. Most importantly, you can have the best system in the world and the perfect entry, but if you're taking these perfect early entries into trends and then exiting here for 50 pips every time, you're just leaving way too much on the table, and you're just going to make it hard for yourself. Once you do have some losses to recover, it can be quite difficult. Of course, be disciplined as well. Again, as the trend continues down, you can wait for the market to be overbought. And then once it's overbought, you can draw your support, whether you want to draw it like that. Okay, got a nice M pattern and a breakout to the downside. Okay, whether you want to just draw it more traditionally, horizontally across, you can as well. There's quite a bit of consolidation in this area here. You really want to look for a clear downwards trend like this. This is perhaps a bit more of consolidation. Okay, but that being said, there will be opportunities within them. You can see big breakout candle there as well. There will be opportunities within consolidation once price does break through. Yeah, so that's it. Simple strategy using the Schaff Trend Cycle Indicator, looking for basically timing our entry with overbought conditions in a downtrend or oversold conditions in an uptrend. I like to trade on the breakouts. Okay, I'll just use the indicator to show me what I can see by looking at the charts. Basically, there's been a pullback, but some traders may actually take the trade on the pullback. Okay, so as the price dropped here, some traders will try to enter up and around here. Okay, whereas others will just wait for a breakout and just use the momentum, ride the momentum off that. The thing about trying to time the pullback is you don't know when the pullback is gonna eventually stop, or if price would, continue up here, for example. Okay, which is why I prefer to wait for a breakout. Well, hopefully you found something useful in this video. If you can like and subscribe, that'd be great and really help my channel. Wish you all the best of your trading. Don't forget, demo trade to begin with until you master your strategy. I hope to catch you on the next one. Take care.